On today's show, we are going to look at some serious ETFs for passive income. My name is Candace, and we'll begin right now. As many of you know, I am a huge fan of passive income. I really do love those dividends. There are lots of good stocks that produce high-yield dividends, and we have covered plenty of them on this channel. Everything from REITs and other income trusts to the split core stocks, and their often mind-boggling yields. Of course, there are also the exchange-traded funds, and we have covered ETFs too. However, a channel subscriber requested another ETF video, and that led to today's video. Usually, when I am talking about ETFs, we are focused on the diversity they provide, and the dividend yield becomes more of a backseat statistic. Though, finding the higher yields is still a priority. In this video, I wanted to switch those roles a little and make the yield more important than the diversity, though only a little, as diversity still rules the day when we get down to the nitty-gritty. Let's take a look at our ETF Dream Team. We are going to start our countdown with an American ETF, and they are Global X MLP ETF with a ticker of MLPA. They are set up to replicate the performance of the selective MLP Infrastructure Index. They have a dividend yield of 7.518%, which comes in the form of a quarterly dividend of 72.5 cents American per share. They have had a little growth over the last year, but you are more or less investing in them for the dividends. Being an American stock, they are best placed in your RRSP. With Wealthsimple Plus, the USD RRSP is a perfect place for this stock. Who wants to pay a 15% withholding tax? Not me. We have BMO US Put Right Hedged to CAD ETF with a ticker of ZPH, or ZPH for my American friends. This is a BMO ETF that uses covered puts to enhance their dividend yield. A covered put is similar to a covered call, but instead of taking a bullish approach as a covered call does, the covered or short put is taking a bearish approach to the price action. In this case, we are looking at a dividend yield of 8.186% in the form of a monthly dividend of 10 cents per share. Growth-wise, these guys are just not advisable. They are here purely for the dividend play. We have Evolve Canadian Banks and Lifeco's Enhanced Yield Index Fund, which has a ticker of BANK, or bank. That's a pretty good ticker. They utilize covered calls as part of their investment strategy in Canada's largest banks and insurance agencies. We are looking at a dividend yield of 8.889% in the form of a monthly dividend of 7 cents per share. This is also another ETF where you are not expected to see a lot of growth, but the dividends are definitely nice. We have Wealthsimple Developed Markets X North American Socially Responsible Index ETF, which has a ticker of WSRD. This ETF looks to replicate the selective Wealthsimple DMEX NA Socially Responsible Factor Index. In a nutshell, this means they invest in companies that do not violate social or environmental values. That is absolutely pretty cool. They have a dividend yield of 8.983%, which comes in the form of a quarterly dividend of $2.56.6 per share. They are a newer ETF, and they have experienced a good amount of growth, though most of it was lost in this year. But in better market conditions, they should be looking good for growth in the future. We have the Evolve eGaming Index ETF with a ticker of HERO. They like to replicate with their investments the selective eGaming index. This includes a lot of companies that have their hands into gaming, and with the popularity of the metaverse, this will be a thriving sector. They have a dividend yield of 11.437%, which comes in the form of a quarterly dividend of $3.93 per share. They have experienced modest growth over the last 5 years, but the last year has not been kind. In all fairness, the first couple of months of 2022 have erased a lot of gains many companies made in 2021. we have the Evolve Innovation Index Fund with a ticker of EDGE. They are a pretty solid ETF with a goal to replicate the performance of the Selective Global Innovation Index. Their investments cover a broad range of industries, which is good for diversification for sure. They have a dividend yield of 12.375%, which comes in the form of a quarterly dividend of $5.03 per share. Growth-wise, they have not had a lot of growth on their 1 year, but if you look at their 3-year, they have done well with a 60% return on investment, and that doesn't include their dividends. For this one, we have our second American ETF, and it is Recon Capital Nasdaq 100 Covered Call ETF with a ticker of QYLD. They look to replicate the performance of the Nasdaq 100 and use covered calls to enhance their dividends. They have a dividend yield of 12.867%, which comes in the form of a monthly dividend of 20.2 cents per share, and that's in American. They are not a growth company, so all about the dividends with this one. Also, keep in mind to avoid a 15% withholding tax on those dividends, this is one to park in your Wealthsimple Plus USD RRSP. We have the Purpose Bitcoin Yield ETF with a ticker of BTCY.B. They are a spot Bitcoin ETF that also uses covered calls to enhance the yield even when the market is underperforming. Their yield is an impressive 15.275%, which comes in the form of a monthly dividend of 7.9 cents per share. Growth-wise, they will mirror Bitcoin. So if you have a long-term bullish view on Bitcoin, this is an ETF that should be extended the same expectations. We have the Purpose Ether Yield ETF with a ticker of ETHY. They are a spot Ethereum ETF that also uses covered calls to enhance the yield. Speaking of yield, their yield is an impressive 23.794%, which comes in the form of a monthly dividend of 8.3 cents per share. Growth-wise, they will mirror Ethereum. Keep in mind the covered call strategies employed will maintain the dividend even in a bear market. For our top spot on the Dream Team, we have First Trust AlphaDex U.S. Healthcare Sector Index ETF with a ticker of FHH. This ETF looks to replicate the StrataQuant Healthcare Index with a good diversification across the U.S. healthcare sector. They have our top yield of the day at 24.357% in the form of a quarterly dividend of $2.24 per share. For growth, they have been up a little in the last year. However, when we zoom out to 3 years, they have been up quite a bit with an ROI of 35%, not including their nice dividends. These are some pretty nice ETFs, and with new ETFs entering the market, it would be very interesting to see if this list changes in the future. That is absolutely more than likely. Just consider, a year ago, we did not have all of these ETFs. As usual, I need to remind you that I am not a financial advisor and am only the beginning of your research. A financial advisor is the end. If you guys loved this video, be excited. There is way more to come. Until then, why not watch one of these videos? And before you jump into that content, just be sure to like and subscribe to support the channel. We'll see you in the next video.